they're planning. We all know that most of our clients are planning the end of the year. Most of our clients are planning sort of, roundups and meetings and stuff. And what we try to do is host kind of a series of webinars to help with that. We have a lot of clients who plan their training sessions and some of their off-site meetings around this webinar, as well as some of our other Encompass webinars that we had last week. And then we're going to having a trade webinar with our customary and reasonable fee calculator the following week. So we're trying to really help and support you guys and make sure that we're out here doing the best we can to give you everything that we need. This industry is changing a lot. So as you guys know, within the mortgage lending space, the change is completely constant. The change, whether it's technology changes, whether it's infrastructure changes, whether it's loan origination systems, and now recently with the Collateral Underwriter. So Collateral Underwriter to most people is going to be something that they're either very familiar with or not familiar with, and I'm going to go into it and kind of assume everyone knows nothing, and then kind of build it up, but then also talk about some of the day one certainty associated with that Fannie Mae is now offering. So what is day one certainty? And I'm sure if you guys are familiar with it. During the MBA conference, Fannie Mae announced day one certainty, which basically gives full reps and warrants on certain data points or certain initiatives that Fannie Mae has determined will help limit their seller servicers' buyback risk. So there's key aspects of the mortgage originating process that have been the most potential. Things like employment, verification of employment, assets, as well as the appraisal. With the appraisal being probably the single biggest issue of understanding what is a good appraisal or is a bad appraisal, and kind of putting that appraisal in the underwriting's hands. I mean, I know when I go out and speak with and talk to some of our clients, they always have questions about the appraisal process. They understand asset, they understand employment, they understand income, they understand data, certain aspects like the credit score. But when it comes to the appraisal, for whatever reason, they could even have a good appraisal that they're not comfortable with, and they're never really comfortable with it, and that's just because it's somewhat of subjective, it's somewhat of a subjective offering, and you deal with a situation that the appraisers are using their opinion. They all look a little different. They all have a little different style of doing it, and what Fannie Mae is trying to do is provide some level of relief to any repurchase demand. So you can find information on day one certainty on their website below. So certainty on the appraised value. So what Fannie Mae is doing, if you look at a little time on here, on December 10th, which is Saturday or Monday, they're going to publish some of the reps and warrants and the value reps and warrants. They already gave us some of that information, but they're going to publish a more updated guide. They did publish a guide 2 days ago, which had some additional information. But really, December 10th is the date they're going to enable this. What they're doing is, as long as the Collateral Underwriter score is below a 2.5, they're going to give you full reps and warrants associated with the appraisal, as long as there's no fraud, right? And that becomes a whole separate kind of discussion, but that's basically what they're offering. They are putting together some property, enhanced property inspection waivers, and basically what they're using CU as is you'll be able to input a value and then estimated value, and then as long as that estimated value is within the threshold that they determine reasonable, you may or may not get a property condition waiver. Where that value comes from, or how that value is determined, is a completely separate discussion. Whether it's an AVM, whether it's a desktop, whether it's a full appraisal. Some lenders and clients of ours are talking about AVMs. Some lenders and clients of ours are talking about desktops. Some are going to say, no, we're going to order the full no matter what. Some are saying drive-bys. Fannie Mae is not really giving you any, as far as what I've seen, any guidance regarding that, but they're allowing you to input, and then you kind of get the waiver. I've seen some people say they're never going to take it, and I've seen some people say they're going to, and I'm not, here to take a position on that, just kind of telling what I'm hearing. So beyond that, what I really wanted to address is the collateral underwriter piece. So what is collateral underwriter? And that's where a lot of clients that I go, they kind of fall into to three buckets, right? So you get the first bucket of they have a full implementation team. I was out with a top 5 lender yesterday in Chicago that's a client of ours, and they literally have an office with 50 people, appraisers, underwriters, chief appraiser, appraisal reviewers, and they are full-blown collateral underwriter experts, full implementation. They got the whole thing. But collateral underwriter, for everyone that doesn't understand, is a proprietary appraisal review application that was developed by Fannie as a tool for their lending partners. It gives you the ability to review an appraisal with Fannie's data. And basically, when you look at the, when they're saying they're offering a full reps and warrants on 2.5, this gives you sort of a gauge. This is based on 1.8 million appraisals reviewed by Fannie. This sort of gives you a gauge of how the CU scores line up. So you have, you think they're 2.5, so this is 2 to 2.9. So let's say just half this. So about, and this is a best guess, about 40% of their appraisals will get this. So then that leaves to the question of, okay, well, what if you don't get it, right? Because the thing is, and this is where the appraiser cannot control the CU score, nor can an underwriter stip for the CU score, right? So it's not like this is something that is in anybody's control other than the initial upload, the CU score, the review of the appraisal, and then the determination of whether the underwriter thinks or the lender wants to take a position on this appraisal or not. And that's really where it becomes really a tricky scenario, because if you have a 2.5, 2.4, 2.3, you're going to say touchdown, right? But if you don't, what are you going to say, right? Because now the reps and warrants are on offer, and everyone wants those reps and warrants, but there's nothing that you can do to change it. And that's when the collateral underwriter tool is really supposed to be used as a tool with expert advice or expert oversight as is this a good appraisal or not. Now there's flags and associated warnings and review tools that'll help, but at the same time you certainly need to take a really hard look. So this is why I lean towards, what is, some people don't understand, most of our clients or most lenders are not as aware, because only 20% of appraisals are reviewed in CU right now, right? So that means 73% of loans have no interaction with collateral underwriter that are sold to Fannie, and which Fannie has expressly said that it's a tool, but most lenders, 73% as of now, have not even access to the system or don't even review the files. And that's a problem, because ultimately Fannie is monitoring that from what I've heard, and also that they want you to, and it's cool, right? So it's a tool to the appraisal quality. They expect the same level of hiring, staffing, training, and oversight that you have for your underwriters that you would have for collateral, right? And that's what they expect. And so what I see in the market, and most mortgage lenders, is they either have a full implementation team, that they have a chief appraiser, they have staff, they have people, they have reviewers, they have QC people, and they're fully implementing this collateral underwriter process, and they're all for it. And that probably represents the 20% or the 20%. Relying on AMCs and understand general importance, we offer a variety of tools and risk management systems to help our clients when it comes to CU, whether it's through our QC processes or whether it's through our kind of appraisal panel management processes. And then the third one, which is no understandings or implementation of the process at all. They completely ignored it, and they're kind of waiting around for that. And so if you're in that bucket, it's okay. 73% of people are in that bucket. But it's something that, as you want to know, I'm kind of going to give you the answer here, is that this is going to have to change because Fannie and shortly Freddie are making this a priority. So this is just an example of what Fannie Mae has, what Collateral Underwriter looks like. I don't have right now on this full access to the system, but this is just an example. And basically what it does is it gives you the appraisal. It gives you the appraisal of the comps used. It gives you the data that is in the market, right? It gives you the data that is available, and basically your job as a reviewer is to determine if this is a good reflection of the market, or if the appraiser did or did not do it. Based on this information, it will assign you a score to this appraisal, which will then give you the reps and warrants. And there's another example of the updated one that they have. So you can see the risk score. So that'd be a 3, the appraised value, the lender, the heightened risk. And here's the thing. So just because it's a 3, and again, if we look at the chart here, there's still a large percentage that will be a 3 or above, about 30%. That doesn't mean it's a bad appraisal. That means that Fannie Mae's algorithm. We see a lot of rural areas, a lot of new construction, a lot of sort of odd appraisal properties that are really good appraisals that have high scores for no reason at all. And so with the scores, what you're going to get is CU Flags. So you'll see flags associated with a variety of things. And then you'll also see messages by category, so where there's adjustments, comps, data, reconciliations, and then also the messages count. So you'll have kind of a couple scenarios. What we do on our side for our clients is we obviously look at the CU score, and we have depths of review that we look at based on the CU score to help assist our clients with meeting the initial requirements, right? So if you have a CU score of 3 and there's 2 flags with the comps, then what we can do is look at those 2 flags and help reconcile those and clear those flags and hopefully review the appraisal in a way that makes sense, that now when Fannie or anyone else looks at it later on, that you'll see that these specific issues have already been addressed. One of the things that I think a lot of lenders are still in is how to implement it, right? So if you look at this, what I see most mortgage lenders, the implementation process is really going to come from talent, right? So what we're seeing is either talent or outsourcing it, right? So what we're seeing is a lot of chief appraisers coming back in the mortgage lending process. We're seeing a lot of lenders designate underwriting teams to just underwrite the appraisal. And we're also seeing a lot of lenders now expand the scope of which they have traditionally looked at when it comes to the appraisal, right? We really look at CU, you look at the XML, you look at the SSRs, you look at all of the requirements that now Fannie has put in place when it comes to the new appraisal review requirements, soon Freddie Mac, soon FHA, and just assume this is going to be the standard. They're definitely wanting you to take a much harder look digitally at the appraisal, and with digitaliness comes issues with consistency, right? So it's only context now. Heightened valuation or heightened risk of an appraisal is contextually accurate, right? Not necessarily that the appraisal is good or bad, but they're looking at the market, right? So what at the base level, they're expecting you to understand that market, and they're expecting you to understand that the market itself has ups and downs, but that this appraisal in context of the market is considered accurate. They also know how many times you've uploaded an appraisal, and they also know how many times that house has been appraised for, what values, the square footage, the the distance from the comps. I mean, all the things that you would expect them to check and double check, they would take a look at. Now the thing is, though, was also they're looking at like things like square footage differences, they're looking at adjustment differences. I mean, everything. And what they want you to do is reconcile this to make sure that the appraisal is considered contextually accurate. Now, from their position, it is what should have always been done when it comes to the appraisal. So implementation, let's talk about this. What are we seeing from our larger clients? Let's just use $3 billion or more. They're hiring a chief appraiser, and they're hiring a team to handle some of the interpretation. They have their own internal policies, procedures to handle, to clear flags, to order reviews on files 3 or above is what they're doing, whether it's a desk review, field review, internal review. They really have some skill set on staff, because when you think about a $3 billion lender, with the amount of volume they're doing, this is going to be happening over and over and over again. With our medium-sized clients, let's say $1 billion to $2.9 billion, they have a defined escalation process, whether it's in-house, the underwriter reviews it, whether it's outsourced, whether they AMC review it. We do a lot of these internal reconciliations. We have QC staff and appraisers on staff to handle and clear these flags. And some of our clients even have us do a field review or desk review. Because the problem is that what they're looking for is contextual accurate competency of that market. I mean, honestly, the appraiser is supposed to do that, right? I mean, and from my perspective, as an appraiser, you should trust the appraiser. But at the same time, there's also data issues and data elements, so that we know on a certain percentage of the loans, you're going to have a situation where the Fannie Mae score is higher than what the full reps and warrants would be. And so because of that, if the Fannie Mae score is higher than full reps and warrants, you're in a situation to where who's going to, you don't get that, right, day one, certainly. And I need to address this in some way, right? Now, you don't have to order a field review. You don't have to order a desk review. Some of our clients just reconcile the flags, which we do on our side, or some of the clients will actually, just go ahead and go through with it as long as their underwriter is comfortable with it, and as long as they've had a chance to review Collateral Underwriter and are comfortable with it. Smaller clients, $1 billion or less, similar to the above, but they're heavily on the AMC or another outsourced process. And I'm not selling the AMC stuff. I'm just saying that there's something that needs to be done, right? So you need somebody who has this hat on, Collateral Underwriter on every day, and is looking out for the risk of the company. One of the things that we do with our clients that I've seen some other lenders do is we're monitoring not only with our clients that have appraiser panels, but internally the average CU score by market. So this is an example of a September group of appraisers, to where you'll see that the average CU score is some of these are higher, right, than the two, and then some of these are lower. That doesn't necessarily mean that they're good or bad, but it's not just about necessarily one appraisal, right? Because you have a situation to where these markets and these appraisers in these markets and the appraisals done in these markets have to be continually monitored, right? So not all, and if you go back to here, these are not only, this is overall, but a lot of the 2.6s, 2.8s, 3s are good appraisals. They just happen to have higher scores in those markets because for whatever reason, those markets are more complicated. When you look at monitoring this, it just can't be saying, well, this appraiser is a good appraiser because it's good, or this appraiser is a bad appraiser because it's bad. This is an example of a weekly report that we have for certain markets for some of our clients, where we're saying, okay, in this same market, this is all one county, what are the scores for these appraisers, and what are the CU scores in context, right? So you would say that somebody that has a 3 or above, and this is just an example, would be sort of a negative, maybe a little higher risk. You'd want to take a look on 7 files, because this guy in the same market has a 2.6 on a similar number of files, and this guy has a 2.4. Now you would say, well, Brian, I get it, just the guy who's got the 3, just forget it. And that's not the way it works. That's not the way we do things. That's not the way it is. The goal is you have to look at it, right? So you have to address, okay, this guy's CUs are generally a little higher. He has a worse score. Why? Maybe it's the type of property. Maybe it's all new construction. Maybe he's doing all more complex properties that are rural, and the CU is not perfect. Again, it's just a tool, right? And so those are the types of things where you're going to have to really put in a monitoring system for the appraiser and the appraisal process to make sure that you're getting good quality appraisals. And again, so go back to the implementation slide, we see this in 3 ways, whether they're doing it internally. I was just at a client yesterday that has 40 people that are designated to this, whether they're doing externally, whether through an outsourced appraisal management company or through an outsourced service provider, or again, like what you've seen through the previous slides, only 27% of appraisals are reviewed in CU, which is just ignoring the whole thing. But there's not a lot of ignoring that can be done anymore. The Fannie Mae, and they've made it very clear that this is going to be something that they're going to start looking at and expecting their lenders and their seller servicers to look at. Also, they're expecting to have a more overall quality process. The same type of process is in place to ensure the quality of the collateral. When it comes to your underwriting, is the same processes you should expect to have in place going forward. And that's where the hiring chief appraiser, third party NMC, or internal desk is sort of the solution from what I've seen. I'm impartial on both. If you're a lender doing 20 units a month, 50 units a month in one state that is pretty vanilla, you could probably get away with doing it internally with the help of somebody that knows and experience in the market. If you're doing multiple states, you're doing 200-300 units a month in multiple areas, your call center, you're doing those types of things. It gets a little more complicated to just doing it in-house because of the market factors, right? So reviewing the files in local markets, using CU in different markets, and that's where hiring that chief appraiser or that third-party AMC sort of comes into play. Again, there's not one answer, but there's definitely a pattern that I've seen, and all of them can work. It just depends on really where you want to invest your resources. So December 10th is a big date when Fannie Mae puts this implementation. You want to review all the bulletins that are coming out. There's a bulletin posted on the 6th, and also there should be, the 6th, but the implementation is the 10th. Gain access to CU and understanding its importance and understand the time they're changing. Fannie Mae and Freddie Mac are both taking a much more in-depth look at collateral and are expecting their mortgage bankers to do so as well. The collateral piece is certain to an extent been a something that's kind of in the background because not many people understood it. Now it's something that is going to have to be in the forefront and something that everyone's going to have to really take a look at and really make sure that they are addressing what now is the new standard, right? So the new standard in Fannie and Freddie and the new standard in collateral is going to be having multiple processes in place. My personal opinion is there are going to be new products that are available, like a desktop product or an AVM product, and knowing when to use those tools. The property inspection waiver is something that is available. However, it is something that takes on a certain element of risk as well. We're just inputting the information. And then using Collateral Underwriter, because again, the Collateral Underwriter is not the answer, right? So Collateral Underwriter itself is just a tool, and Collateral Underwriter itself is just a way or a method to help understand the appraisal. Ultimately, it comes down to the appraisal itself. So just because it's a 2.8 or a 3 or a 4 or a 2.6 and it doesn't get the full reps and warrants doesn't mean it's a good appraisal or a bad appraisal. Right? And just because it's a 2.3 or 2.4. So that when it comes back to like, well, Brian, what do we do? And that's why I said, that's why I have this, right? So this is where I see the investment in implementation, right? You really need to have somebody on staff who understands what's going on, who understands the processes and the procedures, and whether that's in-house whether that's going through an outsource or whether it's handling it through an internal team. I've seen them all work. It's just a matter of what you guys and what you want to do. If you're a call center, definitely go AMC. If you're doing business in just a couple counties, maybe one state, geographic market area, you could probably keep it in-house. Once you get bigger than a couple hundred units a month, it becomes not cost-effective to do so, right? So you're going to have 5, 6, 7, 8, 9, 15 people, 20 people, 40 people. Do that, and it's not that you can't, but it's just one of those things where you end up, maybe over-hiring or overstaffing for those. So with that said, I am going to open it up for questions. And just, oh, by the way, all of this will be monitored. I mean, all of this would be, is going to be available on our website. Just to give you guys a little bit about CoesterVMS. So this is, I started this company. I'm an appraiser, and we work with 15 of the top 30 lenders, soon to be 17 in the next couple of weeks. But most of our lenders are your traditional mortgage banker, your mortgage banker doing selling Fannie Freddie direct. We just finished a direct integration with Fannie and Freddie directly for the UCDP. We're one of 6 vendors in the country that have that, and we're offering soon a direct integration for data transfer for the LDD. We have a custom Encompass integration that we built from scratch. We have a fee calculator that I just filed a patent on. It's 100% accurate. They'll give you an exact fee quote. You will never get another fee increase. It's also integrated into our Encompass system. And we have pretty good controls in place. I mean, this is not supposed to be a sales pitch, but I do want to answer some of your questions and get into that. So let me end this show real quick, and let me get into your questions because I can't. Yeah, so the PowerPoint will be available after the call, and then I will be sending out a recording of all of this later on. Okay, so question. Has Fannie or Freddie, or has Freddie come out with a similar, so Freddie Mac is coming out with a very similar product to Collateral Underwriter. It should be available in the next couple months. They're working on it with a partner, Clear Capital. Dwayne, congratulations on that contract. And they are mirroring what, to a certain extent, what Collateral Underwriter has in place. So very similar. Again, as you know, Fannie and Freddie do things in secrecy for the most part, but yeah, they're coming out. I would expect FHA to do something similar, and I would expect this to kind of be of a standard going forward. Okay, let's see if we have any other questions. Yes, our fee calculator is available on the website. And is available on the Encompass integration, and you can go to our website and view if you go to our YouTube channel, we'll have a demo of both of those, and it's available now. You can go and view that. I will be sending out a PowerPoint presentation of this, and that is all the questions we have. So this was very straightforward. We appreciate it. Thank you everyone for attending. We kept it to 30 minutes like I like to do, and I hope everyone have a great day. And again, this will be available on our website as well as available on our YouTube channel. Thank you.